Welcome to the second segment of my interview with Glenn Renwick, the Kiwi ex-CEO of Progressive USA. We'll be talking about robots, whether insurance is evolving, revolting, or going nowhere. So getting straight into it. At Progressive, I understand that you started with 100% agent-led sales, but then moved the model and brand to direct-to-consumer. What was the catalyst behind that change?
Yes, and this all happened pre-internet, so we have to think about 800 numbers and the like. These are really important decisions because they had great resistance. But it seemed that in the United States in, let's say, the very late 70s, early 80s, there was an evolving 800 number culture for certain products. Even Sears Roebuck, not necessarily a storied company today, but had more catalog sales and so on and so forth at the time. Then by sort of the late 80s, it was starting to have appeal in other segments of the retail industry, not so much in the financial services industry, but in this particular case, it involved me. The pronoun's really not important, but I did sort of have a couple of key people. I said, you know, I think this could be a way that we could supplement our distribution, and this may be the vector of change that really is going to happen in the marketplace. We all look awfully bright when it comes out to be the right vector, but that doesn't necessarily always happen on every business decision. And in this case, it couldn't be more positive for Progressive because it allowed us not only a different distribution channel, but it allowed us to sort of introduce innovations a lot faster because we had one less constituency. Our agents remain very important, and I don't want to sort of suggest that Progressive was trying to in any way move away from agent distribution, but everything that was sort of on the horizon, and while you couldn't necessarily see exactly the way the internet has developed and how users have gravitated to it so quickly, we certainly could see that that was a potential. And there are individuals who want to go see their local agent and get advice, and maybe they've got other insurance needs that they want and share with that particular agent. But there was a massive part of the marketplace that just wanted auto insurance. And as much as the industry would love to be able to say, well, you need professional advice and so on and so forth, and again, I am not in any way negative towards agents. We still generate a great deal of our business through our agents and love them. But it wasn't that difficult to create an intelligent interaction with the consumer. Now, our first attempts at this our user interfaces were not nearly what they are today, but moving to direct, and direct now represents more than half of the premium income of Progressive, but the agent part is extremely valuable, and certainly for some other products that they're a little bit more suited for. So it's a mixed model. However, I make it seem like it was okay. There was great resistance from agents, and they felt that we were trying to take their business from them. And that really wasn't the case. And now I think we've got an extraordinarily healthy model, and if I can just go on a little bit, because we did the direct to the consumer, we had the need to develop a consumer brand, which may never have happened if we'd been agent distributed. So now agents can actually represent a company that for them is the best consumer brand that they can represent. So it actually did come sort of full circle to being a positive for our agents as well.
So you have spoken about the agent resistance. Were there any other hurdles when implementing a huge change like that?
That is by far the largest. However, there are some regulatory issues, and they're US regulatory issues, so I won't go into them in great detail. First of all, the insurance in the United States is regulated by the states, so we have really multiple jurisdictions, 50 jurisdictions, that regulations surprisingly are not the same in individual states. And they weren't written to oppose direct in any way, shape, or form, but they weren't written with direct to the consumer in mind. So the whole notion that insurance policy would have an agent was sort of embedded into the regulatory framework. And here we're coming along, as Geico had also done similarly, and selling directly to the consumer. So that part of the regulatory framework really wasn't there, and surprisingly isn't there today, but there's no opposition to it, and it just, sometimes the regulations sort of look like they were written at a period where this didn't exist, and I'm sure to some of your entrepreneurs and people in the insurer tech, they're facing issues where what they're doing wasn't anticipated by regulations. But luckily we didn't have anything that was a major hurdle that prevented us doing things, but there were oftentimes delays and proofs that we had to produce and things that we had to do a little differently.
And going direct when you started meant using the telephone. In what way did internet change the game?
Well, it was quantums. Yeah, the telephone, that's at least we forget, at that time was still quite an effective device, but clearly costly, and clearly from a scaling point of view, problematic, although we have lots and lots of call centers, but we would have had even more had we not had something like the internet. But more so, the internet sort of provided the ability to start really getting into much more intelligent user interfaces. And we created labs where we would actually watch the retina of people's eyes so that we could actually determine whether what looked really cool graphically was effective for them. So we took it to a level of science that I think was extreme. I'm sure others do it. But we all know websites that look good but are frustrating. And then there are others that may or may not look as good, but it just works. And it anticipates your flow. We had to become very good at sort of that mindset. And then on top of that, what I'd call intelligent data fill. Now, I don't know, I haven't been in the New Zealand market long enough to really know what is available and what's done, so you may be light years ahead of where we were, or this may not be as relevant. But you don't want to spook the consumer out by the moment they type their name. You sort of like, yeah, I know everything about you. On the other hand, really intelligent, well-paced data fill so that you can actually, okay, I understand really quite that you have these vehicles. And do it in a way that just doesn't put the consumer, hold it, this is getting a little spooky for me. And then little subtle things that we can sort of laugh off, but actually in a great design look good. You put in your vehicle and it actually will bring up your vehicle. And in some cases we even got the color right.
Wow.
Just because of what was available to us in external databases that we could feed in at the time. So that type of obsession with getting the interview for the sale right really led us through, and we were certainly the market leader in that. We were the first to ever sell a insurance policy through the internet.
Wow.
And we all, so there's a few of us still remember the first lady in Wisconsin, I think it was, that bought the policy and some of the details about the policy. Obviously we wouldn't, privacy, we don't give out any more details than that, but it was one of those fun things where you go, okay, we've now got back then, a very basic website. Will anyone use it? And then the first sale. It's like, that's cool. And then the second sale. And it's, from there has been quite a wild ride.
How else would you say insurance distribution has changed, and where do you see the future of insurance distribution going?
Well, I think resting, and again, moving aside from the agent, which is the right choice for some people, But on the direct side, just really sort of wresting control to the consumer is great. This is a little bit of a distribution, but more of a product in and of itself. We allow people now to have their insurance premium judged or determined by their usage of the vehicle. So we started off by actually putting a little dongle in the car, which would give us telemetry data. Actually, it was batch at first, but then ultimately telemetry and so on and so forth. Now we can do it all from the phone. So we actually can know how you're driving your vehicle, which, frankly, I'd be surprised if people don't sort of say, even in New Zealand, with less of a focus on liability, you know, why don't you rate me based on who I am versus all the other factors, my age and so on and so forth, where I live. And this is a great movement away from what I'll call correlation variables to causation. So actually we now can say, look, we're going to rate you as an individual. That's very different than the original notion of insurance, which was we'll put you in a large group of people that look similarly from a insurance underwriting perspective to you, and your price will be determined by that group dynamic versus your individual dynamic. Technology is allowing us to move towards a true customization or individualization of insurance premiums. And I think that kind of movement combined with the data collection and data initiation on the internet really does change everything. A second one that hasn't really happened yet, it was something I was, let's just say we were planting the seeds for, is should insurance be fixed term? You know, today we think very clearly about I'm buying a 6-month policy or an annual policy or whatever, renewable. Is that necessary? And with technology, why can't it be more of just a continuous variable with relatively flexible start and end dates that are based more on the user need? What if someone doesn't need their car for 3 months and it's not being used? Well, should they pay premium for that? The telemetry can certainly help in that respect. So I think we're moving more to sort of insurance for the one and more based on how that one actually uses their vehicle and whether they're a very fast accelerator or a very fast braker, which we found to be two causal relationships far more important than whether they were going at a high speed or even above the speed limit or something like that. So data is extraordinarily valuable, extraordinarily rich. You just got to mine it for the right things.
And with all these changes in distribution and product, do you think the place of trust has changed in insurance sales?
Yeah, I think that people would certainly have great trust in their agent, and I think that model, I don't want to date that model because that remains true today, but I think that's why people go to an agent. We are clearly talking about a generational type thing, and people are willing to trust websites and perhaps have never had an intermediary in any parts of their life, so that trust can be transferred almost to yourself. But you want to make sure that whoever you're dealing with, and this goes for lots and lots of industries, feels trustworthy. And I'm not talking about publishing your privacy policy or your data release policy or anything like that. I'm talking about just every single element of it, why it feels right as a match for you. And that's a discipline and a skill that isn't just, oh, get it right one time. It's the small, subtle details all the time of that interaction with the consumer. And by doing that, I think the consumer can start to say, I trust myself. So I'm not sure whether that trust is going onto the insurance company as much as it's going to themselves, but I trust myself in combination with, let's say, Progressive. And I think that's an outcome that with the brand of Progressive and giving a lot of power to the consumer, that trust relationship is now shared versus abdicated.
So it's still very much important, it's just changed slightly perhaps.
Yeah, and insurance trust is critical.
Yeah. What are your thoughts on automating parts of the insurance customer journey? Are there some parts of the customer journey that are easier to automate maybe than others?
Yeah, I'm a huge fan of automation. That was, a big part of Progressive. I tried to always present Progressive, at least to Wall Street, as a statistics factory and a technology company, which wasn't really there for the smile value. That was really how we looked at ourselves versus sort of a more classic underwriter. So from a technology point of view, we went to great lengths. I mean, the most important is really how it manifests itself in the product, and I talked a little bit about telemetry now and using the car and the driver relationship as a primary rating variable, and I think that will continue because they know where they are, they know how they're being driven, and those things are critically important as we start to develop a price point that can be individualized. Then you can move on to the claims segment. We took claims, this was a longer story, we took claims extraordinarily seriously in terms of process innovation and making sure that we redefined our product as a company. First, our product, and I think this is probably true for most insurers, was cash. Something happens, you get cash back. Well, we found that wasn't what the consumer wanted. What they wanted was their car back. I'm not talking about injury, which is a big part of the insurance premium in the United States, but just physical damage. They wanted their car back in the driveway. But we often, at least in the United States, exposed them to a supply chain that was very a low frequency transaction for them. They didn't understand body shops, and that didn't always go well. So we ultimately changed our process to make the consumer ultimately have their car back in the driveway, and we took proxy and care of the car during that time. And that was a lot of technology involved in that as well. Now you have even more tools that will supplement that process and probably build on it with photo inspection. So it's one thing to take a photo of damage. It's another thing to take a photo of the damage of a car and have it matched with 5 million other similar quarter panel damages, and through artificial intelligence actually be able to say this is probably the right price for fixing that particular quarter panel. Now, if you have 5, you can't do it. If you have 5 million, you can get very close. And with artificial intelligence combined with photo inspection, and we all know what can be done with some of the Google tools and so on and so forth today. That's a really powerful notion. So your question is really technology. It pervades every part of the cycle. We talked a lot about the intelligent data fill. We talked a lot about, we just did claims. I could also talk about how we presented. Progressive is the only company, I think, in the world that actually presents its full financials every month. We can talk about the reason for that later. But again, it was all based on technology. Here's my but. My but is that when your customer really wants to talk to you because it's one permutation or combination that you didn't get inside of the primary flows of your software, they can get extraordinarily frustrated by not getting the service that they need. And occasionally that means talking to a human being. You know, the chatbot might not get that one. So it's, what is it, horses for courses? My advice would be, don't necessarily cut the human-to-human interaction out. We know it's expensive. We know we want to minimize it. If you really focus on the details, the subtleties, and process improvements all the way along your food chain, you can get an awful lot of it out. But don't deprive your customer of the ability to occasionally just have that one, as I said, awkward permutation that didn't fit. Now, if you get enough of those, maybe there's a possibility you can also automate that and backwardly fill your product or your service gaps. That would be my only advice. So I think it's absolutely an industry that can take and use technology, no questions asked. But it can be very brand damaging if the consumer gets frustrated by not being able to feel like there's a way to get into that system.
So would you say that the future of robo-advice and automation is really about giving the customer the choice about speaking to a human when they want or using automation when they want?
Yeah. And it's up to you, the provider. If you do it really well, you'll change that balance point. If it's not done well, people will opt for the human way more than you probably want them to. But one of the things that we always encouraged our developers, our customer service people to think about is lifetime earned premium of the customer. It's very expensive to acquire a customer. I'm coming from my perspective where television advertising, Google advertising, social media advertising, et cetera, is very expensive. Keeping a customer can be extraordinarily profitable, especially if you can keep them for decades. And where, unlike some of the more state farms of the world that have been around for a long time, we don't have too many that are multi-decade customers. But as we sort of continue to advance that timeline, we expect that we'll be developing multi-decade customers, and their lifetime earned premium or lifetime profitability, let's just say that, is extraordinary. And we want to be fair to them, we want to be fair to the company, but you don't want to miss the opportunity to have them say, yeah, I'll stick rather than change just because of that one small interaction. So I'm a big advocate, 2 thumbs up for technology, but not at the cost of not switching if that's what the customer needs or wants at that time.
Thank you, Glenn. It's really interesting to reflect on how much distribution has changed and also where it's going. It sounds like trust is still very important, as is quality of service and retention. In the next segment, we'll be talking about innovation and insurance.